Welcome to your daily 5 minutes market brief with JP Morgan and Luna. Today is July 12th, 2025. I am Luna.
I am JP Morgan.
Striking, I think, is how these different events, tariffs, court rulings, even Bitcoin are all sort of tangled together. You saw this kind of risk-off feel in stocks overall, even with some bright spots. It's definitely complex.
Exactly. So let's look at the top level. U.S. stocks, the big indices, they pulled back a bit from those record highs, right? The S&P 500 down 0.3%, Dow Jones 0.6%, NASDAQ 0.2%. Seems like those trade tensions really hit the mood.
Oh, absolutely. That late Thursday threat from President Trump, hefty tariffs potentially on Canada and others, that definitely made investors nervous, dampened the risk appetite.
But it's interesting, you still saw contrasts, especially in tech. Like NVIDIA hit another record.
Yeah, unbelievable. Market cap over $4 trillion now.
Wow. But then Meta, Facebook's parent, slid over 1%.
Right. That seemed tied to reports about rising regulatory risks over in the EU. So very specific factors at play even within the same sector.
Oh, yeah. And what about energy? I saw oil prices jumped.
They did. U.S. WTI crude was up around 2.8%, pushing towards $68.50 a barrel. That followed an International Energy Agency report suggesting the market's actually tighter than people thought. So energy stocks got a nice lift from that.
So with stocks generally a bit shaky, where did people put their money for safety? Gold.
Gold definitely benefited. It was up about 1%, hitting roughly $33.56 an ounce, highest in, nearly 3 weeks?
Okay, classic safe haven.
Exactly. But the real standout, maybe, was Bitcoin.
Ah, yes, Bitcoin. Still going.
Still going strong.
Yeah.
Extended its rally, surged past $118,000, a new all-time high. Seems like optimism about potential pro-crypto regulations is really fueling that. Maybe people are starting to see it differently as a possible hedge itself.
Interesting times for crypto. So, okay, stocks down a bit, oil up, gold up, Bitcoin way up. What were bonds doing amidst all this?
Well, Treasury yields were climbing. The 10-year yield went up about 8 basis points to around 4.42%. That's near a one-month peak.
And why is that? Just the tariff talk.
That's part of it, potential inflation from tariffs. But it's also investors bracing for more government debt. The U.S. Treasury is planning to issue a lot more short-term debt, T-bills, to rebuild its cash balance. And, interestingly, the real 10-year yield, adjusted for inflation, held pretty steady around 2%. That suggests the rise in the headline yield is mostly about rising inflation expectations.
Got it. So that Treasury plan you mentioned, issuing more T-bills.
Yeah, they want to get their cash balance up to $500 billion by the end of July. That means a lot of T-bills hitting the market very quickly. We're already seeing that expectation push short-term interest rates higher. It's a big liquidity move.
Okay, and speaking of things directly hitting people's finances, this CFPB rule about medical debt, huge news there. A federal judge in Texas actually struck down that rule, the one that would have taken medical debts off credit reports.
Right. That was a Biden-era rule challenged by the Trump administration and industry groups. It aimed to help about 15 million Americans by removing roughly $49 billion in medical debt from their records.
So what happens now that it's voided?
Well, it means those medical debts will continue to show up on credit reports and factor into credit scores. That could keep borrowing costs higher for some people, particularly subprime borrowers. It's a direct hit to consumer credit, really.
Wow, okay. And another big government move, this time involving China and tech.
Yes, the administration blocked a Chinese tech acquisition. President Trump issued an order stopping a Hong Kong company, Surui Group, from buying Jupiter Systems.
Jupiter Systems, they make audiovisual gear.
Exactly. And crucially, it's used in critical infrastructure, military settings, sensitive industries. The review by CFIUS found an unacceptable risk to national security, concerns about potential compromise.
So a pretty clear signal from Washington.
Definitely underscores the hard line on China, especially in tech, and it probably increases the perceived risk for any similar deals going forward.
Okay, so looking ahead now, what's next on the radar for investors?
All eyes are shifting to next week. We get the U.S. Consumer Price Index, the CPI report, and the expectation, or maybe the fear, is that inflation might be reaccelerating. Plus, Q2 earnings season kicks off. JP Morgan reports Tuesday. Overall, analysts expect pretty modest profit growth for S&P 500 companies, maybe 5 to 6% range.
And the big risks we should be watching?
Well, number one is probably this overhang of unpredictable trade actions. You hear market veterans talking about forever tariffs, potential tariff meltdowns.
Right.
It's a major wild card. Then you've got the fallout from that CFPB ruling, potentially tighter credit for consumers, and also that rapid Treasury borrowing pushing up yields, which could challenge stock valuations, especially for, high-growth tech stocks.
So putting it all together, what does this mean for you, the listener, the investor? It probably means caution is warranted, right? Thinking about diversification, maybe including things like gold or other hedges.
Exactly. Staying informed is key, but try not to overreact to every single headline. Maintaining that long-term perspective is usually the best bet.
Sound advice.
And it really leaves us with a kind of provocative question, I think. In an environment like this where political decisions seem to be driving so much of the day-to-day market swings, how much influence does the fundamental economic data, like that upcoming CPI report, actually have on what investors feel and do?
That is a really interesting question to chew on, something to think about. Thank you for joining us on this deep dive. We hope you found it insightful. Stay informed, stay curious, and we'll be back soon to unpack more complex topics. Enjoy the brief? Please like and subscribe. From equities and bonds to global risk sentiment, we deliver day's key market moves, macro trends, and institutional flows in just 5 minutes. Live stream coming soon. Stay tuned.